On behalf of Crosscheck Media and BizTalk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona.
It is hot. It is sunny and it's hot. Okay.
Sunny and hot. Yes, it is. It's sunny and hot everywhere around the country because it's almost summertime, Toby. But I tell you what, we have the smartest guest that we have ever had on Buy, Hold, Sell, probably for all of the Crosscheck Media programs, actually. Maria Jelescu Dreyfus. She is the founder and CEO and CIO of Ardinall Investment Management. Maria, welcome to Buy, Hold, Sell.
Thank you, Todd. It's a pleasure to be with you.
Well, it's a pleasure to have you with us because I got to say, MIT, 15 years at Goldman. I mean, you definitely are the smartest one. I know Toby is probably he's probably right there at 1A, being the second smartest guy we have on Buy, Hold, Sell. But you definitely take
Maria,
the
you have to understand, look up the term kiss ass in Romanian. Whatever that is, that's what Todd is, okay?
Well, I'm a big fan. So,
Yes.
So Maria, can you tell the audience a little bit about Ardinall Investment Management?
Absolutely. We are a New York-based fund. We invest in the public markets. We started in 2021, and we run a long-short strategy and a long-only strategy alongside. And like you were saying, we have a few select sectors of expertise. I come from an energy background. I used to be an oil and gas investor at Goldman for most of my career. But what we're doing at Ardinall is across the spectrum. We're generalists, but we have a few sectors of deep expertise: energy, industrials, infrastructure, transportation, being some of them. Old economy. Think old economy.
Well, it's interesting though. Today, for instance, you talk about transportation. Look at shippers today. The shipping in our index here, shipping is like the biggest sector up in price today. Why? The same old story. What if the Hormuz Strait is closed? Insurance rates have gone up. Do you have some facts or some thoughts for us on what's going on in the Middle East?
Well, I mean, I think what's happened in the Middle East changed the dynamics just in the last few days. Roughly a quarter of the world's production. So we produce 100 million barrels a day. Roughly a quarter of that passes through the Strait of Hormuz. So think about it. Think about 25 million barrels a day going through that. It is absolutely astounding. And what's happening puts obviously a big premium on safe transportation and energy production elsewhere because of the implied premium that's coming out of the situation in the Middle East.
Yeah, I know you're a Permian Basin expert. One of our most incredible oil and gas. People don't quite really understand that for the oil to come up, there needs to be natural gas involved in pressure, right?
Yeah.
So it's starting to, based on our data, it's starting to peak in terms of production. Do you see the Permian staying at this level, or where are we going to get the extra oil and gas?
It's a good question. I would say that over the last 10 years, the Permian surprised all
everybody,
analysts and kept going higher and higher in terms of production. So you said a couple of things. It surprised expectations in terms of its growth. It also surprised us in terms of what's called the gas-oil ratio. So as we're producing for oil, we're getting more and more gas, which is called associated gas. So what's happening is now you've increased oil production, but you're increasing gas production at a higher rate than oil production. And this is actually a good thing, given the fact that what we're going through right now in the US with the whole industrial renaissance and nearshoring and reshoring, we're going to need more natural gas for power generation. We're going to need more natural gas to electrify our buildings, our vehicles, everything. We're going to need more natural gas to send it over to our friends in Europe who need it through liquefied natural gas. And we're going to need more natural gas to send down to our friends in Mexico.
So you make a good point. Those AI data centers, too, by the way, seem to consume a heck of a lot of natural gas for the power.
Absolutely. Think about the scope of it. We used to talk about large data centers for cloud applications just 3 or 4 years ago. A big cloud application was 100 megawatts, 200 megawatts. We're talking about 2 gigawatts right now.
Yeah,
this is actually the size of a large city in the US. It's the equivalent to powering Boston and all of its suburbs.
Yeah.
It's just to get your arms around it is completely insane. So yes, and how do we power those data centers? Everybody wants clean, everybody wants green. Wind and solar, unfortunately, intermittent, so they're going to be part of the solution, but that's not the only way you can get them powered. So you're going to need nuclear and you're going to need gas.
Well, there's no question. I work with a company that is, I think, the only company so far that has created a carbon-free natural gas power plant. And the first big plant we're doing is in Midland, Texas, that TCPC plant that is being built. 100 megawatts of power and zero carbon, and it spins off CO2, which goes to bottlers, which are on a shortage, and then spins off sterile water, which in Texas, semiconductor plants are running out of sterile water. There are some solutions out there.
Absolutely.
But this is a small company, and until that really gets ramped up, plus it takes 2.5 years to build these power plants. It's not like there's a prefab power plant for 50 megawatts or 100 megawatts of power, right?
And that's 2.5 years, Toby. That's optimistic.
That's optimistic. Exactly.
If you need a FERC interconnect, you're going to be waiting for a long time.
Well, that's a great point too, because again, Texas, Midland. I mean, they literally have a pipe from Energy Transfer that goes right to that zone. That's why they, Midland approved the deal. But to your point, it's 3 years, maybe 4 years. I think I was told most recently it was more like 4 years all in.
Yeah.
Because of all the aspects of this. Even if it was approved tomorrow, it would still be 4 years.
It would take a long time. Yes, absolutely. And think about the fact that ERCOT is one of the most the quickest approval processes in the country. And what's interesting is Oncor, which is the regulated utility that covers the Permian Basin, they're part of SEMPRA. I mean, they're seeing their load growth go from virtually tiny little growth driven over the last 10 years by the Permian Basin development to exponential growth.
Yeah.
They're running as fast as they can, but that's still not enough, to the point where a lot of the oil companies are starting to think about their own power and having behind the meter solutions and building their own generation in order to electrify their operations and take the electricity that they need.
So in your perspective, sort of the thing no one's talking about is the most important thing of this, is that to get the power, to get sustainable power, to get power that's 24/7, 365, maybe we can't build 8 new 400 megawatt plants because we don't have enough gas.
Well, we have enough gas. There's a lot of gas in the country. There's a lot of gas. The issue is the permitting. The issue is the interconnection. The opportunity is taking some of the existing assets that are not running at high capacity utilization and being able to lift the overall capacity utilization of the system. So there's some spare capacity in the system, and we need to build greenfield also to meet the increased demand.
And how many trillions are we talking about, Maria, do you think?
Probably not as much as the national debt, but not much less either.
Wow.
That's a good answer.
So with that, though, are you
Go ahead,
seeing a
Todd.
lot? Are you seeing the Interior Department open up these leases, though? I mean, I know we have quite a bit of natural gas off of our own shores
Yeah.
here in the United States. I mean, have you seen any type of flexibility there?
Well, in terms of onshore or offshore?
Well, offshore.
There's a lot of gas onshore. A lot of it is on private land. So, for example, all the development that's happening in Texas is more dependent on technology and the operators' development plans. There's a new area of growth in the Permian Basin on the New Mexico side.
New Mexico side, right?
And that's accelerating. That's also a great source of gas growth because those wells are gassier. You have a lot of associated gas. But I wouldn't say that the big source of incremental supply is offshore gas. I think we have enough cheap natural gas onshore, super easy to develop in the Permian Basin, in a bunch of other places. And think about Marcellus in the Northeast.
Right.
Right? There's infinite gas
Right.
in
Yeah, Toby,
terms of resource.
Toby,
Problem is
the more famous Toby, who's the president of the large
rice, yeah.
company up there. I mean, I've talked to him many times over the years, and he'll look at me and say, particularly when I used to be on Fox News, and he would say, Toby, all right, I'm your brother. I'm the Toby.
Yeah.
Can you
Yeah.
help us get permitting? Can you help us get pipelines?
I mean,
And the answer always was, well, it's Pennsylvania. I'm sorry, it's a liberal state, and they believe in just freezing to death.
I think that there's an opportunity, and I also think that the resource base in Marcellus in the Northeast is so cheap. You can produce natural gas below $1 an MMBTU.
Yeah, an MCF.
You literally have gas coming out of your ears. There's a tremendous resource there. We just have to find ways to transport it. So either accelerating some new pipeline developments, and some midstream companies are now talking about revisiting some of the pipelines that had been shelved.
Yeah.
And there's a lot of other opportunities to actually use the natural gas in state, right? Instead of transporting it, you can convert it into electricity on site and ship the electrons as opposed to the molecules.
You know, that's a very interesting point. Would you tell the audience, though, just the symbiotic relationship between oil and natural gas, and how to get oil out of the ground, you need natural gas, you need pressure to bring it up? Because I think a lot of people don't understand the relationship.
So what's happening, and this is a phenomenon that's particular to the Permian Basin, is you drill for oil because that's how you get your economics, right?
And that's fracking, right? You're going horizontal fracking.
Exactly. So you used to have the conventional wells where you just vertically drill a hole in the ground, and many decades ago,
right,
oil would just come out.
Pennsylvania, 1912.
Exactly. That resource is pretty depleted. So what we're doing now with new technology is we're actually going laterally, and we're going laterally into the shale rock, and then we frack it, like you said, which allows oil and gas to flow out together. When you do that, you get a certain natural gas that's associated with the oil. The bulk of the economics for the producer come out of the oil. So you're almost indifferent to the price of natural gas because it comes out of the well anyway, together with the oil, but it's a small fraction of your economics. So in some cases, in the Permian Basin, you actually had negative gas prices because people were maximizing for oil, and they were paying folks to take the natural gas and haul it.
Well, the first time I was ever down there, of course, they were flaring all the natural gas.
Absolutely. Yes.
I mean, as an energy sort of analyst guy, I understood that conceptually, but when you see these 50-foot flares of natural gas just burning 24/7, you see, like, if you're coming in a helicopter, which I did at night, you could see the flare. It was like being in Vegas on the Strip.
I mean, frankly, that is an economic loss, and in addition to that, it's an environmental disaster. So the good news is that a lot of that changed, right? Like if you go right now and you take a little aerial tour of the Permian Basin, I don't think you're going to see that anymore. So you're able to capture that gas. You can clean it up. You can pipe it. You can use it for power generation. But that's the way the geology works. You get both oil and natural gas. 90% of your economics are driven by oil, so you're going to care about drilling for oil, and natural gas is almost a byproduct.
All right, so can you give us some names or some areas that you like to be investing right now in 2025?
Well, there's a lot of interesting opportunities up and down the energy chain, right? To take a bet on the producers, you have to have an active view as to where oil and gas.
Yeah, you have to have price perspective,
which is not easy. I think that there's also a really good opportunity to look at the fact that no matter what the commodity price is, because of some of the dynamics that we talked about, including the fact that you're getting more and more gas out of each incremental well, you're going to see the users and the movers of these molecules benefit tremendously, because even, let's say, in a flat oil supply in the Permian Basin, you're going to see increased gas production and you're going to see increased transportation demand. So if you're a midstream company, if you have pipes that transport natural gas, ethane,
Sure.
propane, the other molecules, you will benefit tremendously from this growth. So we actually like a lot what we call either the picks and shovels or
Sure.
the arms dealers, right? Like,
Me too.
so midstream, downstream infrastructure, we find that very interesting in terms of the pipeline companies, in terms of the LNG levered companies.
Yeah.
What's happening on the Gulf Coast in terms of LNG development is absolutely amazing, right? And this is a great way to fix our trade balance problems, right? Like there's so much resource of cheap and fairly low carbon natural gas in this country, and the ability to export it to the countries that need it. When you look at Europe and how Europe needs to basically continue to take less and less Russian natural gas, the U.S. LNG exporters can really fill in that gap really well and fix some of the trade balances. They're obviously, very topical these days in terms.
Yeah, my Louisiana friends would say, don't forget about Louisiana too, because
absolutely.
we ship that LNG out there to the Europeans big time.
Absolutely.
Are you suggesting, Maria, are you suggesting then on the trade balance side, because we have this commodity here and we have such a surplus of it, that this could help cure the trade imbalance that we're facing?
Absolutely. So think about it. US, rest of the world, right? Like we buy goods and services. We have a massive trade imbalance. The way you fix it is by exporting more. And one thing that we can export that the world needs is natural gas. Europe is short natural gas. Most of Asia is short natural gas. And we have this unique ability with the technology and the advent of unconventional development to send very cheap natural gas in this liquefied form to Europe and Asia. And the returns are actually tremendous. This is very, very compelling. And
Do you know
Europe to diversify their energy sources away from Russia?
Do you know if this is being discussed at all?
Absolutely. Absolutely. So LNG is part of the geopolitics of all the discussions that are happening right now.
Absolutely. Well, Todd, China, in the sort of tariff insanity, put a 25% tariff on ethane, which is how you make plastic in China. And they did it for about 2 weeks, and the Chinese companies came to the government and said, "Are you insane? I mean, come on. We're going to 50% tariff sending the toys, and it's now 25% more expensive to make the plastic toys." So I think cooler heads are prevailing, Maria, don't you think?
You're right. You're right. We heard through the grapevine that after all this ethane tariff imposition out of China, they found a loophole, a certain port in China where all the ethane was coming from the US and bypassed tariffs. I mean, they need cheap ethane, right? A lot of their plastics production is based on naphtha, which is an oil linked input. So when you bring natural gas, so one thing that we should absolutely mention is on an MMBTU basis, on a calorific basis, natural gas is significantly cheaper than oil. So to get the same output in terms
the same BTU output.
Exactly.
Yes.
The implied value in natural gas is significantly cheaper than oil. You have a 6-to-1 ratio right now, right? So if you think about oil, let's say at $60, this is the equivalent of $10 natural gas.
Right.
Obviously, natural gas is much cheaper. So to get the same BTUs out of it, you can burn natural gas in a much more inexpensive way.
Well, Maria, I think that we should get rid of the name British thermal units, and it should be now American thermal unit. What do you say? An ATU.
That sounds a little bit like the Gulf of Mexico becoming Gulf of America.
Right, exactly. Exactly. Hey, by the way, I'm sure you've visited, China and Mongolia and all the parts of Asia that if they don't have propane, they don't eat at night. There is no natural gas pipeline in India to somebody's home unless you're the, Taj Mahal. And India is also a big needer of American. It goes through the Panama Canal,
Yeah.
and I think they're another place for us to be able to sell. And then we own the shippers. So we in our in our funds we own shippers. We sort of let them go a couple of months ago or 6 months ago because the prices had really gone down in shipping. But we're bullish on all the natural gas, LPG, propane shippers, because rates just, according to my Excel spreadsheet over here, just went up 35% 3 days ago.
Absolutely. And you mentioned India, Toby, and that's a great market. It has a lot of potential. The issue is we're bumping up against affordability, right?
Yeah.
So the problem with India is that most of the resource that they have at home is coal. And they have a lot of sunshine. So their industrial policy is build coal-fired generation and
Solar.
develop as much solar as possible. The
Yeah.
problem is that you still need, so that can't solve their energy problem. You still need oil imports, which they've navigated the geopolitics really, really well right now, and they're able to buy discounted Russian oil from all of the Russian related.
Yeah, it is a little strange when you get the report on the black ships out there, meaning the ones that are unregistered, that 95% of them are transporting illegal Russian oil to other countries. How do we stop that?
Well, you have to think about the fact that Russian production hasn't really declined, and most of those molecules have gone to China and India, and they're going at a fairly discounted price. So
I'm fairly discounted. You mean like 40% cheaper than our crude?
So India, to their credit, they played this beautifully in terms of geopolitics, and they positioned themselves in a good spot right now, where they continue developing solar. Unfortunately, they continue the build out of coal.
Yeah.
They're talking about mitigated coal and lower carbon coal, importing natural gas, ethane, LPG, LNG. The problem again is affordability. LNG, there's obviously applications in India, and they can afford it to some extent, but you can't really fill in a lot of that wedge with US LNG because it's very expensive for what India needs.
Yeah, you get a propane tank. I mean, it was amazing to me in like northern India, the liquefied natural gas tanks sell like cars. I mean, it's a lifeline, and how they get that natural gas, to your point, is from various things, but to get it from the United States at the cost per, however you want to figure out that cost, is too expensive for them, and yet there's no, people in America just don't understand that if someone's going to cook dinner in many parts of India, many parts of China, if your propane tank is empty, there's no warm dinner.
Yeah.
That's
so
incredible.
that is so important about this whole energy transition discussion, right? Because there's different vectors and different aspects to it, and energy affordability is so critical, and energy development. How do you give folks in the global South the opportunity that we've had in terms of economic development and access to all of these things that we haven't take for granted? But they also want their cars, they want their HVAC, they want their refrigerators, and we have to find a way to do it cheaply and sustainably.
Well, I know this is not your space, but these small nuclear reactors, we own Oklo, we own a couple other ones in that space. Now, obviously, the Trump administration has come out in favor of that, which I'm thrilled about. Any perspective on these? These SMR is the only one we know that's actually licensed by the Nuclear Regulatory Association. But do you follow any of those? And do you have any?
Yeah, we do. And again, we're very positive on the outlook for nuclear and how it's the only source of baseload zero carbon electricity. The problem is the capital costs and the timeline that it takes. And frankly, if you're thinking about SMRs, you need to have a very, very long-term perspective. You need to think about 2040, right? And you need to think about how much we need to scale up in order to really move the needle, right? Because the small SMRs, you need to not just build one or two. You're going to need a huge fleet of them. And what's also interesting about SMRs is that the technology has to come down in cost quite a bit. And normally the way you scale down costs is by increasing size.
Yeah, size, yeah.
So here you're doing the opposite. You're trying to create a miniature reactor, and you need to work against the laws of physics, which means cost downs as you scale down, not up. So the opportunity is tremendous, but the challenge is quite substantial. And there's a couple of companies who are leading. So again, we're going to need them. It's not a matter of solar versus nuclear versus gas. It's a matter of all of the above.
All the above.
We need everything to be successful, and not just nuclear, but also magnetic fusion and some of the newer technologies, geothermal. We're going to need all of them.
I'm on the same page, Maria. Now, quickly, because I know you can't really talk about stocks per se, but
Yes.
the pipeline companies, the midstream companies, what's their pricing power now? For a while there, they were sort of flat, and now all of a sudden, I'm seeing the rates rise for pipeline connection.
It depends on where you are, right?
Okay.
If you're in Pennsylvania, you have no competition. No new pipes are going to come and challenge you. If you're in the Permian Basin, it's a lot more competitive, but obviously the growth there is quite substantial. So it's geography dependent, right? You have 3 major pipelines from Canada that bring Canadian crude down.
Yeah, until they cut those off, by the way.
So it's highly unlikely we're going to build new pipes from the Canadian oil field in Alberta to the U.S. Gulf Coast. So those pipelines are pretty protected in terms of their pricing power. And again, it's geography dependent. But I would say that steel in the ground is very valuable these days because of the timeline that it takes to get any new. And that's the issue, right? Like we have the same challenge in conventional and fossil-based development as we do in green and
energy.
You want to build a solar project or a wind project, it's the same permitting headaches that you have with building a natural gas pipeline. So we're going to need to address both because we're going to need both.
Okay. I like it.
Todd, I was just going to say, one of the most successful stocks we've ever had is a company called USA Compressor that that leases the 10,000 horsepower. When you talk to people in your industry and you talk to gas guys, and they say, you know what, it's all fine and good, whatever you're talking about, but if we don't have that 10,000 horsepower compressor, my gas ain't going nowhere, right?
Yeah. And you know what's interesting about that? The overall cost of the compression is so small that they're completely price insensitive. Yes.
Incredible. Well, guys, we're going to leave it there. What a great discussion. Maria, we got to
What an energy nerd. I'm in love.
Oh,
my gosh.
Brilliant. Just absolutely brilliant.
And energy is such a fun space. And, people say that the whole economic activity and the whole economy is energy transformed. And I couldn't agree more. It goes into every aspect of our lives. And, if we need AI data centers, right now the bottleneck is energy. So, it's interesting how the hyperscalers all became energy experts. So maybe you can invite them to your next podcast and we can all geek out on energy.
Love it. I love it. Well, that's a great idea, and it's definitely
a good
something
idea.
we should do. Absolutely. I love that stuff. So listen, we're going to leave it there, guys. Maria, thank you so much for joining us on Buy, Hold, Sell. We absolutely have to have you back.
What is your mutual fund or ETF? What's the signals on it?
It's a private fund. It's not a mutual fund. Yes.
Oh, okay.
Yes. But we do, the website is ardinall.com. Definitely check it out. We'll have a description, a hyperlink in our description as well, back to the Ardinall site. So, but on behalf of Maria Jelescu Dreyfus, who is the CEO, CIO, and founder of Ardinall Investment Management, and Tobin Smith, CIO of TransformityResearch.com. I am Todd Schoenberger. We thank you once again for joining us on Buy, Hold, Sell. We'll catch you.
Energy nerd. Good.
Buy, Hold, Sell, brought to you by Crosscheck Management.